All right, guys. This is it, boys. This is it. I'm almost positive we just bottomed. I want to say I'm positive. I literally want to put my neck on the railroad. I'm almost positive we just bottomed. Lots of things happened yesterday. Lots of things. I'm going to try to speed run through this to get it out before the open. It's too important to get this out this morning. We called for May 4th, May 2nd here to be the bottom when it activated here. And then we called for the massive spike and the drop into this level right here. We got it, perfect. And then it broke it here, which generally means more volatility. This shouldn't have happened. It did. We closed right around the same level, but then generally means more volatility. It ends up causing this. This was a pure puke. This was a pure puke. Fell off the cliff, middle of no man's land, never should have happened. And it did. There's so many things, we'll go through them of why this happened. First off, we got a massive glitch trade off of the bottom, right at the close yesterday. Dark pool trade basically goes up to flat on the week. It went up 3%, so I could see us going up 3% today. What happened at 423, and we're going straight up here. We had that blow off bottom here. This was the effect from the Asian markets. We're probably going to get there maybe today, most likely tomorrow. And I expect it to blow through it. So that's one. That's one. That's a glitch trade. That looks like it's active. Two, this is our megaphone pattern where I don't know if it's here or here. I don't know the top wick of the top of the megaphone yet, but this is the bottom trend line for the megaphone pattern that we believe is happening over the next year or two, or even more than that. And it's to the T. You have a blow off bottom into the trend, through the trend. It felt and looked like forced liquidation. And it was true. Hedge funds heavily liquidated yesterday. It was massive up momentum and it just kept bleeding lower. This was literally hedgies getting called up and telling them sell. Sell everything. Sell everything. I don't want to hear it. Just sell. That is what you'd want to see. And this is the most important part about this, is that it broke. It broke the uptrend. It broke the positive momentum of the S&P. That is what we've been calling for. That is what we wanted to see. We wanted to see it on the monthly after the Fed. We never got it. We never got the monthly cross on the Fed day that dropped the other day. We just got it yesterday. 17.7, 16.2. We just got it yesterday. What that represents is that the COVID wave, the momentum of the drop of COVID, we went drop, up, 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 up. You could think about just everyone bought the market. And then we just, for split second, one day, broke lower. And what that does is, if the psychology and other things as well, the quality of the movement, if the psychology is very euphoric or very bullish and exhaustive here, when this breaks, it goes. The fact that it moved like this over the last 8 to 12 months, and we're probably the most bearish we've been since 10 to 20 years ago, this is a fake breakdown. This represents the crack of the uptrend, and you crack it, and then you take the residual move. You'd either be a B wave higher or a 5 wave, which is the residual of this, which is what we've been talking about for a while. That's what it looks like it's doing. And it gets confirmed this week. That's exactly what we wanted. So it's going to go. And what you'd end up seeing this week is the rejection of that. This week into next week, you want to see the rejection of that, which would represent the strength of this entire bull move. It will be insane. Period. It will be insane. Basically the opposite of what we saw the last 2 weeks or so. You want to see a violent activation, big move, and this is going to be a continuous move. We're going through all-time highs by July. The only other wave cycle that is possible is it doesn't go through all-time highs by July, or it hits all-time highs sometime this year. I don't know when it would hit it, but then we kind of chop and then explode higher and we don't get the correction or any other volatility or any other thing that drops you below like 400, 420 for the rest of the year. And we have a blow off move to like at least 520 first half of next year before the recession. That's the only other thing that can happen in this scenario. That's it. That is it. We either rally through all-time highs and then we flash crash into August, September, and then we go higher, or we do just one of these chops and then we explode higher into the first half of 2023 before the recession. That's the only things that can happen. Okay, we got it. The weekly, like to the T, it's gorgeous. We gap down into the 100, and then we got a glitch trade. It's reacting with that. It's reacting with this blow off move. 5 red weeks in a row. Now we're pushing 6. That momentum is in this wave right now. People don't realize it. They don't get it. Broke down on this. Anything else? Did we hit on the quarterly? We hit the quarterly. Holy crap. 399. Wow. Wow. Okay, that's massive. That's massive. So that's that. There's a glitch trade there. And the most important thing were their news feeds in the VIX and UVXY yesterday. Literally Cramer put in the bottom. And people are going to be so mad about it. Cramer literally put in the bottom the algo change at 11 o'clock yesterday, right at 11 a.m. And he says 35 is basically the line in the sand. It goes up to 35, got rejected, and then it exploded up into it, and then got rejected overnight. 35 is the line in the sand. And after that, that's it. Above it, we flash crash, and below it, we have the most ridiculous rally. We're going to have the most ridiculous rally. This is it. That happened on the VIX and on UVXY at the same time. And my alarm at 397.5 that I made over here in March last year, it got hit. 397.5. It got hit on the last final blow off bottom here. So it got hit and then boom, clicks back up. Hit the alarm and instantly goes up. It's very hard to do this. We wanted to see that activation right here to the T. This is a very bottoming thing. This is where the market went up 1% in 1 minute. I'll do a 5-minute chart just because it looks a bit better. It went up right here, 1% in 1 minute. In 60 seconds. That is insane. And that was it activating. We were calling for it. We want to see a very violent activation this last hour when it touches the 0 line. It touches it right here on 2 p.m. and then at 3 p.m. you want to see it, and that's the activation. It just trails lower because there's so much momentum in this. It's just, don't think of it as a short-term violent reaction. Think about like a boat kind of turning type of thing. So it took a while for it to turn. Now you're getting a very violent DMI. Everything is kind of clicking. So huge. Targets got hit. Alarms got hit. I think, alarms go off on every index. On the Qs, on the Dow, on the Russell, the SPY, TQs, SQs, VIX-M. Well, like on so many things got hit yesterday. And when that type of thing happens, that's usually a bottom. That's usually an inflection point. Bitcoin hit a mark here. Bitcoin hit a mark here. You want to see a breakdown here. We talked about this weekend that you want to see this drop into oversold is a volatility event pricing in future movement. If it rejects it violently, so today into tomorrow, if it rejects it violently, this is a fake breakdown. Huge wave comes up like this. This is a fake breakdown pricing in a future wave where this will break 29,000. Simple as that. People super bearish. When it did that right there, we expected it to break this because this touched this by like a penny. It's very weird to touch it by like a penny and just go straight up cleanly like that after a huge drop. It just didn't do it. So as soon as that happened, you know, everyone sees this breaking down. Everyone has this drawn on their charts. This is a fake breakdown. You're going to get fucked. You're going to get screwed. Like sayonara. Anyone who thinks it's bearish, it's not. Then the next target is basically the low of this ish. So I would say like 28.8 to 29.4. And lo and behold, 29.7 was the bottom. Because if it breaks this, then it goes down significantly, and that's not what I see right here. Significantly. We expect this, they blow off bottom, and then it clicks, so you're going to get a double bounce into a gap, previous high. So very good, very good, very good. Everything got hit. Everything got hit. This is going to fail. This is going to come down to the zero line into the summer. Massive rally. Massive. This is finally going to activate. This was the most insane overextension here. It's trying to grip, trying to grip, trying to grip. And then it just said, fuck it, blows up to the downside. This is also something very, very, very important that not many people know or saw. But there's also a glitch trade up in S&P at 430, the day of the Fed. Did the SPY not have it? I think the SPY had it. I know the NASDAQ and Russell did. Where are we? SPY didn't have it. The NASDAQ. There we go. So this was the Fed day. This is the Fed day. Okay. That is a very unique event. 305, 312. The futures stopped trading for 7 minutes. This has only happened once this year and once last year. I think, right? I'm pretty sure. Once this year and once last year. Where are we? Where are we? Oh my God, when was the Fed day? There we go. Again, 505, 512. Okay, very, very, very specific event. Okay, the last time that this happened, we literally have it drawn here. Get rid of the OI here. Okay, it happened right here. We even drew it. It's a very, very specific event. Here, it gapped down. From here to here, the market was up, and then the Fed did their Fed thing, and the market crashed straight down 4%, and it left the gap to the downside. And then it had a reactive move to the upside. And then it had boxed volatility since then. I'll show it better on the S&P. But you can see top to bottom, down to the right, down to the right. And then as soon as this happens right here, it goes up. Right? The momentum goes up, and it doesn't go up on price because it's so low. It's just the way waves work. But you can see how it's falling off a cliff here. And as soon as that happens, it stops falling off a cliff. Okay? Same thing with the NASDAQ. It happened right there. And then you get this violent kickback to the upside. It happens right here. So it's 1, 2, 3, 4 days. And the 5th day is the reversal. But you got about 1, 2, 3 very violent days to the upside. And this is also where the VIX algo got triggered February 2nd on the algo change for the downside. So you get the last stabilizer to the upside after that break. And then the VIX gets triggered, and this is why we end up getting all this volatility, all of this disgusting chop. This is pricing in future volatility, not just for the next move, which I think will be in 4 months, but for years. I think this literally is starting to price in the recession at the end of next year, middle of the end of next year. This was a lot. This was a lot. I've never seen it do this much. So if this happens, that's fine. This happened, this is so much. This is pricing in the craziest shitstorm. And the fact that that's true and stocks are down 50 to 90%, you need to see the rally. You need to see the hard recovery this year into next year to get that volatility. This is way too much. Stocks aren't going to go from 90% to 99%. Just not going to happen. Companies that actually make money down 50, 60, 70%. It's just insane. Valuations are not. We're going to go into the SPY here. This is what is important. This is where it dropped and you got the gap down on the futures, and then you got this reactive move. Very violent. 1, 2, 3, 4. Right? We got this right here. And when I was expecting possibly that and then it got triggered here to the downside. Now we'll get triggered to the upside. So this gets crushed. 1, 2, 3, 4. 1, 2, 3, 4. This is a kickback, and then you could see on all the time frames, UVXY, if S&P broke down support, okay, and this isn't a bottom, UVXY doesn't move like this. This is insane. This should have been at least 22, 23, 25, 27. Market down, was it 3%, 3.5%? Didn't even break Friday's high until the very end of the day. And right? See how stupid that makes? How stupid sense that makes, right? And then people in UVXY would be like, wow, that's bullshit, that's BS, blah, blah, blah. This is why it's catching itself. The momentum is to the upside. It's just one of these days, this is what you'd see at like a blow off bottom. Never should have happened, but it did. And then it does that. And what do we say? May 2nd was the bottom right here where it did this ridiculous catch, right? It's catching the weight of months of volatility. This is the impulse wave. This is the strength of the bull move coming. It needed to push itself up and then flush out all the negative momentum. Then you look at this, it just broke last week's high on that Monday. Right there. Look what it did. As soon as it touches it, glitch trade, 3% higher. As soon as it touches it. So this is the same momentum as this, 2% lower. Well, why is that? It's just the way waves work. It's very, very toxic. This is kind of like, this is one sine wave, and then it pushes down because there's so much momentum, pushes down and to explode higher. It's like an advanced wave. It's not something you'd be able to see or understand unless you just know it, and I've seen it for years. But you can see it basically on the UVXY. Literally breaks that top and instantly fails. Same day as the UV algo change and the VIX algo change. It's literally perfect. And then you have max fear. You have hedge funds saying that they got blown up yesterday, that they were forced to liquidate, and that's how it felt. It felt like these big green candles throughout the day, and UVXY didn't even go up. Bullshit. Bullshit. I'll call bullshit. The 50 weekly was the target. It missed it again by 20 cents. It's at 20, we missed it by 20 cents. But for anybody who's bearish, this is the strength of the correction coming. This is the strength of the correction coming. It's going to be brutal. So we exploded. There it is. Rejected at the 200, rejected, broke above it and explode up. And then get rejected, 1811, 1817, with opens in 15 minutes. So we literally was saying this for weeks or if not months. The market needs to break down. It needs to crack for a brief moment. Could be a day, could be 3 days, could be about a week. But it has to be a very brief and concise moment where it looks bearish. You cannot be bullish. You cannot be bullish. You cannot be bullish. There's no way. And the way you end up knowing that is the way it moved for months. It wouldn't have moved like this if we were actually breaking down, period. And people don't know wave dynamics. It tells you the story. Fake breakout, everyone ends up selling because you cannot hold. Everyone buys protection, and then they sell the rallies. Now, everyone's been saying you need to sell the rip, sell the rip, sell the rip. And they're going to do it. So no one makes money to the upside. And the bears lose money all the way up because they're going to be shorting every single pop. They're going to be selling every single pop. And the bulls will be doing the same. And so this is how waves kind of work, is that now no one is bullish, no one's going to hold, no one's betting big. So, and there's no margin left in most of the trades. I mean, we didn't get a washout. We didn't get like a huge washout, but like the enough margin got flushed out to make this a good enough trade to allow this to bottom, basically. Absolutely disgusting, like truly absolutely disgusting. It did this much. So it's like the market clicked, and then this is the stabilizer for the downtrend coming. It's going to be, I explained it this weekend, it's going to be a move that has never happened before in the stock market. Literally. It's going to be a move that's never happened in the stock market before because the VIX yearly is breaking out into a positive wave for the first time ever. Ever. It's going to make a move that the world has never seen before. And I don't know what to expect. I have an idea, but like you never can really tell until you see it. I don't think we'll get like a 20% limit down like 87, but it could get close, kind of. Like I expect the VIX to get around 70 in like a week from 20-ish. So it's going to get really, it's going to get really, really ugly. But not yet. Not yet. We also broke the downtrend here, and we just retested it on that blow off bottom. There's a lot of things that got hit here, and then you got the trend line. A lot of people are calling for a bottom. People talked about them covering their short yesterday. Forced liquidation, this is what you'd want to see. And we were looking for a weekly positive green week today. Also, there's a 40,000 calls bought last week for Apple to hit 165 this week. Right? Open red. You get the gap down. So as soon as this breaks above 156, that's the trigger. So I'm expecting something needs to trigger this. CPI is that trigger. Something needs to click where you'd see a fat candle to the upside. That's CPI on Wednesday. So it's interesting how Biden talks about inflation tonight, and then we get CPI in the morning. So it's kind of like, quote unquote, like everything happening exactly when it needs to, and everybody's fears get, squelched, so to speak. And that's that. I mean, the real resistance is 440. As soon as this breaks 440, you're not going to go to 460 3 times and fail. You're going to go up to here and fail short term and then blow through it. It'll be if you're going to fail and then blow through it, you're going to get a very, very violent failure somewhere in this 450 to 465 area. It's going to be very, very violent, not just like a little kick. It's going to be like a 3% what the fuck move. And then if something like that happens, very high probability that you go through it, because that's what you would see there. Man, what a fucking trip. What a fucking trip. But very interesting. You can't fool the VIX and the momentum. It really was the bottom. The fucking solar eclipse, actually insane. And then we have a lunar eclipse in a week on Monday. And yeah, this is topping out. That's that. I think that's all I need to say. The Russell broke below its trend. Yeah, something like that. Something pretty disgusting. Qs, this is a massive support from 2021. So yeah, was that a glitch trade? So when you get candles like this, these types of candles, not the spike, these usually fill the gaps. They're not magnets. These are like the 5%ers or something. Usually that's what they are, right? So it ends up like filling this gap here. They can still be a magnet, but the ones that look like that are usually the ones that you don't go to instantly. So we still got the one up here, which we're going to get to 2% higher. So yeah, okay, GG's. And we want to see this week, big explosion, big reversal. And don't think that the reversal is a short-term thing, because it's not. This is a massive move in the works, period. All right? Peace, peace, peace.